Hey Bowtie Nation, Joseph Hogue here with a video straight from your questions. And not that one. No, better but not that either. It's there somewhere, but how to invest on different incomes. How investing in stocks changes as you're able to invest more each month, from $100 to $500 and even investing $1,000 a month. Most investors don't even realize this, but there is a big difference, and not knowing it can be fatal to your portfolio. The fact is, you can invest anything from $1 a month to tens of thousands, but the amount you are personally able to invest each month, it's going to change not only your goals, but also the stocks you buy. In this video, I'll show you how to invest in stocks from $100 all the way up to $1,000 a month. We'll look at how your investing changes and reveal a roadmap to follow, including how to find more money to invest. I'll also explain the critical differences in investing apps depending on how much you invest. I'll show you the specific stocks and funds to buy at each level, and the best part here, it's going to be a building process. So even if you're able to invest that $1,000 a month or more, you're going to learn the basic building blocks of how to invest and build a portfolio at those $100 and $500 levels. We're getting started, but before we do, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I want to start with how your investing changes at these different levels, because it's going to explain the core of what we're doing when we talk about how to invest $100 or $500 and more. Why does your investing change with more money? I'll show you how each level of investing is different, but it really comes down to your level of risk that you're able to take and what you need from your investments. For example, if you're only able to invest $100 a month, then you need that money to grow and can't afford a single mistake. Losing even a few hundred is going to cost you thousands by the time you retire and could destroy your financial goals. On the other hand, as you start investing more money each month, you can take a little more risk and go deeper into some of these other types of investments. I know this might sound ass backwards. A lot of investors think that if they can only invest little amounts, they better make it count with those moonshot investments, those high-risk, high-return stocks to double or 10x their money. I'm going to show you later why it's this kind of thinking that leaves people broke and why that level of risk you take increases the more you invest. Before we start with how to invest $100 a month though, there's another critically important factor here: making sure you're investing on the right app for your needs. Now, most investing apps aren't charging fees anymore, but there are still a few out there, and it will absolutely sink your portfolio at these lower levels. And think about it, if you're only investing $100 a month, if you buy 2 stocks and pay even a $5 commission for each purchase, you've already lost 10% of your investment to those fees. Paying just $5 in fees per trade can cost you more than $30,000 over 30 years on that $100 a month. That's a loss of 15% on your money, and those lower amounts of investing, it's a loss you can't afford. Another important idea here is using an investing app that allows fractional share investing. Now, this means you can invest in any stock with any amount of money regardless of the stock price. If you want to buy $100 in shares of Amazon, even with the share price at over $3,000 each, you can still do that. You would invest $100 and the platform is going to give you $100 worth of shares, or about 1/3% of a share. Now, I'm going to leave links to some of the investing apps I use in the video description below, but definitely check out the Webull app. It's both commission-free and allows that fractional share investing. And right now, they're offering 3 free shares of stock worth up to $9,000 when you start. So click through the link, start investing, and if you don't like the app, you can always try another one and keep your free shares. But let's start off with investing $100 a month, an amount anyone can afford. $100 a month, it's just over $3 a day. And the average American spends over $1,000 a year, or about $2.73 a day on the lottery. Why not invest that money instead and really hit the jackpot? Because look at this, investing $100 a month at a long-term return of about 10% a year on the S&P 500 gets you to almost $200,000 over 30 years. And that could mean $1,000 a month in retirement, all from investing just $100 a month right now. Nation, I know sometimes even $3 a day can seem like a stretch, but this is where your financial future starts. I am confident. I know you can do this. I'll give you a portfolio to get started on that $100 a month next, but what's different here from these other 2 levels is you cannot afford to lose a penny of this money. Yeah, it sucks to lose money no matter how much you invest, but if you lose $100 on a risky investment at this level, say you lose $100 on a bad stock in that first year, that shaves more than $1,700 off your 30-year portfolio. Now imagine doing that every single year because you're investing in the wrong stocks. And that's why for this first level, for those investing $100 a month, I'm going to recommend a simple 3 or 4 fund portfolio. Just 3 or 4 investments that are going to give you that broad market returns without overcomplicating investing. And look, I know it's not sexy and it's not the fun way to invest where you're trying to pick that next hot stock, but it will get you to those long-term returns that you need. And more important, this strategy involves absolutely no work and no stress. That means you're going to have more time to focus on the important things like ways to make more money to invest rather than how to invest it. So I'm pulling these ETFs straight out of a prior video that I'll link to in the description below, but we're going to start with the SPDR S&P 500 High Dividend ETF. That's ticker SPYD. The fund invests in the 80 highest paying dividend stocks in the S&P 500, so those biggest companies in the United States, and has returned 11.3% annually since inception, with a dividend yield over 4% a year. And to that dividend fund, we want to add a little bit of growth here with the Vanguard Growth Index ETF, ticker VUG. And this fund has produced a 16% annual return over that 10-year period and holds shares of 266 companies with a focus on growth. Some of the biggest tech names out there like Apple, Microsoft, and Amazon. So you're going to get growth, but also the stability that comes with these mega-sized companies. Now here with those stocks, we usually want to add some kind of protection with a bond fund. And I do like the Vanguard Short-Term Bond ETF, that's ticker BSV, as an option. But by far, one of the biggest opportunities, the best opportunities in investing right now is in Series I savings bonds. And these are savings bonds you can buy directly from treasurydirect.gov. So there are no fees and you can buy with as little as $25. Now, I bonds have a built-in inflation protection, which means the interest rate has surged over the past year. I bonds right now are paying 7.1% interest, but could reach 9.6% in May. So you've got that safety of bonds. You're guaranteed to get that return plus your money back, and you won't pay state or local taxes on the income like most other bond or investment returns. It's a return as high as stocks with the safety of bonds, which isn't something you get too often, so these belong in every investor's video, and I'm actually creating a whole video on this soon, so be watching for that. Now on those 2 stock funds and the bonds, I would add some kind of real estate stock exposure, and you can go with a fund like the Vanguard Real Estate ETF, that's ticker VNQ, or with a few individual real estate investment trusts. With just these 3 funds and the I bonds, you're going to get stock market growth and income. You'll get exposure to real estate for those inflation-fighting returns, and the safety of bonds to protect your money when stocks do crash. Now I'm going to expand on this portfolio with some individual stocks and investments when we talk about that, how to invest $500 and how to invest $1,000 a month. But honestly, folks, no matter how much you invest, you could actually just stick with this simple strategy. Invest any amount and be extremely happy. Next here, I'll reveal 3 ways to find more money to invest each month. But just like the inspiration for this video, I want to know your biggest investing questions. Let me know in the comments below if there's any topic or a question you want answered in a future video. I want to get back into how to invest, so we won't spend much time here, but I do just want to give you a few ideas on how to find more money. And I know most videos you see with this start with this budgeting idea, but it's bullshit because everyone thinks they're already watching what they spend. Instead, you need to turn your budget upside down. What I mean here is most people are going to start their budget with their income, then take out all their expenses and see what's left over to save or invest. If they have anything left to save, then that's great. If not, it's only then that they start trying to cut their expenses. And of course, the problem here is that if there is anything left after paying those expenses, people really don't feel the pressure to cut their spending and invest more. They may only have $100 left to invest, but that's just how it is. Instead, start your budget by taking out how much you want to invest out of your income first. If you need to invest $500 a month to get to that retirement goal, then that's how much you take out. Doing this is going to make sure that you're on track to reach those goals, and it forces you to cut spending where it's needed. But sometimes you just cannot squeeze any more money from your budget. That's where the side hustles come in, even if it's just a seasonal one that you do maybe 3 months out of the year. And folks, I get it. You work a 40 or more after the commute to and from, you're tired, and the last thing you want to think about is a side hustle, but this could be the thing that changes your life. We've got a lot of videos here on the channel highlighting hustles that you can do in just 5 or 10 hours a week, make $30 an hour or more, and create that extra $500 a month to invest. And third, before we get back to how to invest all this, is slowly start building that passive income business that is not only going to give you more to invest, but supplement your income. What started for me as a side hustle with a few blogs in 2014 and making a few $100s a month quickly turned into $1 million business and a passive income stream that makes tens of thousands a month. I'll link to a video in the description below on some of my favorite passive income ideas, so make sure you check that out. According to the BLS, average household income is around $67,000 after taxes, with total annual spending around 61 grand. That leaves $6,000 or about $500 a month to save and invest. It might be a stretch for many families, but investing $500 a month, this is where we're really starting to see that growth. That $500 a month invested over 30 years grows to just under $1 million or an income of about $40,000 a year in retirement. And investing just a little more means you're able to take a little more risk. Sure, losing that same $100 on a bad investment is still going to mean that same $1,700 less at the end of 30 years, but that's just 0.17% of your portfolio, an easy trade in exchange for those higher returns. So here we're going to start adding some individual stocks, investments to get that extra growth and income for your portfolio. Now, I'll recommend 2 here, but we'll also link to a few videos in the description below for some more ideas. For our income investment, Realty Income, ticker O, is one of the most popular dividend stocks among investors. The company owns over 11,000 properties in retail and the industrial segments, with good diversification across industries and across the United States. It's a really well-managed company with a commitment to that dividend. Realty Income is one of only 65 companies in the Dividend Aristocrats list. Now, that's a list of stocks with at least 25 consecutive years of dividend increases, and the stock currently pays over 4% yield. Now, on that stability and income with that stock, I want to add some growth to the portfolio with shares of Teladoc Health, ticker TDOC. And I know growth stocks have been absolutely craptastic over the last year, but just because the stock has slowed down doesn't mean this isn't the same company. Teladoc has booked a 69% annual growth in sales for the last 3 years and reaches 76 million patients through 10,000 healthcare providers. While growth may not be as crazy high as it was during the pandemic, virtual healthcare is the future, and this is the undisputed leader in that space. Management has a target of $4 billion in sales through 2024, double what it reported last year. On a very conservative 5 times price to sales valuation, that puts the company at a $20 billion market cap, or about double the current price in just 3 years. That's a 24% annual return, and I'm holding this one on for the next decade for that growth. So by adding a few stocks like these on top of that simple fund strategy, you're adding the benefit of that higher income and growth that you just won't get from those broader ETFs. With this next level though, investing $1,000 a month, we're starting to get into the big time. But if you're investing $1,000 a month, you better know how to invest it. Even at that 10% market return, investing $1,000 a month can get you to a $2 million portfolio within 30 years and a millionaire in 24. But it's here that you can really start adding some of those alternative types of investments for even higher returns. And here I'm talking about alternatives like startup investing through equity crowdfunding and cryptocurrencies. These investments are the highest risk, but also the highest return. A survey of angel and startup investments by Willamette University found an average portfolio return of 260% over any 4-year period. That's a 27% annualized return, and some investments produce 10 and 20 times your money. And of course, we've all seen the potential in cryptocurrencies. Even after the recent sell-off, the price of Bitcoin has jumped 3,200%, and an investment in Ethereum would have turned $1,000 into 50 grand. But then while those individual stocks can be risky, these are on a whole nother level. Looking back at that survey of startup investments, more than half of the investments, the first bar here on the left, returned less than the original investment. So now, even with $1,000 a month to invest, you shouldn't put more than about 10% of your total wealth in these kinds of moonshot investments. And put most of your money still in those first 2 levels, into that broad ETF portfolio and then into a few individual stocks, with the remainder in these types of alternatives. If they don't perform well, it's not going to wreck your goals. If they do well though, even a 10% of your money with a 10x return, that's going to double your portfolio. Click on the video to the right to see how to create a dividend portfolio and live off your dividends. 3 simple steps to dividend investing and putting cash in your pocket. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.